Good day, my name is Lakshay Behl. This is going to be my final video about Celsius network. I may make some more videos about the Cell token short squeeze that is going on as and when necessary, as and when my position changes for the positive or the negative, for better or for worse. I'll make videos on CelShortSqueeze, but this is going to be my final take on Celsius network, at least for a while. Until we have new information, because I don't want to continue making videos on speculation, on beliefs, on echo chambers and topics discussed within echo chambers. And I certainly don't want to continue the day-to-day, week-to-week updates on the courts and what's going on in the court, inside the courtroom, the discoveries that happen inside the courtroom, so on and so forth. So this is going to be, for now, my final video on Celsius network. Let's get started. Let's first talk about Cell token short squeeze. Several weeks ago, I said when Celsius filed Chapter 11, the probability of Cell token short squeeze taking place, in other words, for Cell token to be going all the way to all-time highs, new all-time highs, and way beyond the previous all-time highs of, let's say, $20, $50, $100, had become lower, had gone down to 10 to 15%. If it happened, Cell token short squeeze could eventually get us to a point where Cell token did trade for far more than $100. Based on that, I recommended putting in, and this is not financial advice, I just told you what I was doing, putting in roughly 1% of my investable capital into the Cell token short squeeze. And that's exactly what I did. Here are the reasons why I said the probability of it happening, the squeeze happening, is only 10 to 15%. Some people called me a negative Nelly or someone with a lot of doom and gloom in his voice, but I like to be realistic with my expectations. I don't like to have unrealistic expectations. I don't like to have hopium coursing through my veins. I like to be realistic in terms of what is possible and what's not. So we all know over 93% of all of Cell token supply is locked up with Celsius right now, and that's going to be locked up for several months, if not years, depending upon how long this Chapter 11 court proceeding continues. But the remaining 7% is still 45 million Cell tokens. Keep that in mind. This is very important. 45 million Cell tokens are outside of Celsius wallet. They're not within Celsius wallets, they're outside of Celsius wallet. Now, I would assume some of them are owned by employees who are possibly, hopefully, not at least participating on the short side of the Cell token short squeeze. So they're not really betting against us. That's my hope. Some of those might be owned by people who are not participating one way or another in the Cell token short squeeze. However, 45 million is a lot more than the visible 6 to 8 million that you see across the exchanges so far. You can safely assume that several million are owned by the people who are participating in the Cell token short squeeze on the squeeze side, on our side, on the long side. And then there would be millions of Cell tokens in wallets that have been lost because someone misplaced a seed or lost a seed or got their computer wiped out or got hacked or whatever. So that still doesn't account for all 45 million though. So there is a big chance that FTX and other exchanges have cold wallets that we are not aware of. It's a real possibility. There's also a possibility that many of the participants of the Cell token short phenomenon, not the short squeeze, the short sellers might have cold wallets that we are not aware of, or might be relying on cold wallets that we have no idea about. So that is a definite possibility. It's not likely, but maybe. We've been talking about naked shorting for a while, but maybe FTX is covered because they have wallets that we have no idea about. Remember, at least 45 million Cell tokens are outside of Celsius wallets, and we can only account for maybe 10 million of those. So the other 35 million remain unknown. That does not mean that they're working against us when we are working on the Cell token short squeeze, but we cannot also assume that they're working in our favor or that they are completely immune to or neutral towards the Cell token short squeeze. So that is a big risk, and that is why I said there's only a 10% chance of it working. Am I still participating in the Cell token short squeeze? Absolutely, I am. And I will continue to do so until new information is received. So if I find information about, or if I make discoveries about where the rest of those, let's say 35 million cell token are, and if those cell tokens are working against the cell token short squeeze, I'll let you know. I don't subscribe to hopium. I don't work with hopium. I don't work with unrealistic expectations. I like to make predictions based on the information that I have, the data that I have, and that's exactly what I'm going to do in this situation. For now, I continue to have almost 1% of my portfolio in the cell token short squeeze, and that is not changing for now. If it does, again, I'll let you know. There are two other factors that we should be thinking about. The first one is that since this is very slow, some of the participants of the cell token short squeeze might not feel very comfortable in a bear market holding on to the cell token, and they might just get tired and say, screw it, I'm just moving on to the next thing. That is definitely a possibility, and that's definitely happening with some people. I told you when chapter 11 was announced, some of our whales jumped ship, so they were no longer participating in the cell token short squeeze, and I cannot see why 100% of the people who are continuing to participate in the cell token short squeeze will indefinitely continue to participate in the short squeeze. So losing hope or losing patience is definitely a big factor. The other one is that whales have different motives. So we might have a motive of punishing the short sellers. Whales probably don't have, at least some of them don't have the same motives. They're just looking to make some money out of the cell token short squeeze, which I've always said is fine. It's their prerogative, and they get to decide why they invest their money, how they invest their money, and what becomes of it, and for what reason. And if profit is their only motive, that's fine. You have to understand that some of them have a time consideration, so they cannot wait 6 months, 12 months. Unlike you and me, I can wait for 12 months. Okay, I can, as long as nothing changes significantly, I'm going to be in it indefinitely, unless new information comes to fore that makes the cell token short squeeze unviable, which I will of course share with you. I can hold on the cell tokens that I have for a year, maybe even longer, right? But that's not necessarily true for the whales who are participating and who have no other incentive than profit for the participation. And there are other people from other tokens or other communities who are also participating in the cell token short squeeze, which is great news, but largely their motivation is purely financial. And right now we're in a bear market, so if it happens soon enough, many of those people will continue to fight alongside us, but I suspect some of them might just jump ship as markets begin to turn. Now let's talk about Celsius. So I have completely decided that CeFi is not the thing for me. Celsius is not the thing for me. I want to discuss that. And I also want to discuss several arguments I've heard. I've got them here jotted down on a piece of paper. Several arguments I've heard about why Celsius is going to bounce back, or why I'm being, again, a very negative person, or all doom and gloom. This is something that I've been hearing constantly for the last 2 to 3 weeks, and it's enough already, because hopium is something I don't do very well with, and I started getting a public profile, a public persona, because I was just so fed up of misinformation and lies. And now that the shoe is on the other foot, some people expect me to continue being a supporter of Celsius, and that's just not going to happen. Here's why. When I trusted Alex Mashinsky and Celsius, I did that because I believed, and they said so repeatedly, that they were not participating in any risky marketplace, DeFi, CeFi, whatever. Their business model was taking our coins and then lending them out to institutional borrowers who would assume all the risk, while Celsius maintained control of at least 100%, in many cases 150% collateral from these entities that were borrowing our cryptocurrencies. However, as Celsius began to grow rapidly, their assets under management went from a few $100 million to $20 billion or beyond. Most likely, this is my speculation, right? And this is likely what has happened. Alex Mashinsky and his team were unable to find institutional borrowers who would go on, take that risk, and provide collateral to Celsius. And so Celsius was forced to basically go out and make those risky plays themselves, such as swing trading. Now, that is not what I signed up for. When I say my money is in custody, I don't want the custodian to be playing fast and loose with my money. And this was my presumption right until the day that Chapter 11 was filed, that Alex Mashinsky and his team would abide by the business model they had been talking about for years and years, every single week, sometimes several times a week, and they did not do that. If they had done that, they would merely be illiquid at this point of time and not insolvent. If they went insolvent because of market conditions, they could have bounced back from that. But that is not what happened. They actually lost money because they took on the risk that counterparties were supposed to take on. They took on risks that I never signed up for. How many of the people who invested in CelShorts, who put their money on CelShorts, would have willingly put 60, 70, 80, 90% of their portfolios, even 25% of their portfolios, if you knew that they were going to take those risks? The reason why so many people trusted CelShorts, over 300,000 people had over $100 on CelShorts. Many of them had tens of thousands, hundreds of thousands of dollars on CelShorts, millions of dollars on CelShorts. And if I knew that they were taking that kind of risks, I would never ever had millions of dollars on CelShorts. It's just not something I would have done. My presumption was that they were not taking the risks that were unnecessary, and their yield was coming from counterparties that were taking the risks, while CelShorts was covered with collateral. Had that been true, my faith in Alex Mashinsky and his team would not have been destroyed, but that is absolutely not what happened. And I cannot disregard that. Some people call me a hypocrite because I'm doing a turnaround. Someone said, "Oh, are you doing a plan C?" Well, I'm not doing a plan C. I don't care about who gets to control CelShorts. I'm just out. Whether it's Simon Dixon or Alex Mashinsky, they're all the same for me. I cannot trust any of them. If you still continue to trust the people who violated your trust, well, you're pretty much like the dude whose wife goes out and cheats on him and he's like, okay, I can still trust her. It doesn't make you a hypocrite to decide that you cannot trust someone that you used to trust in the past based on their recent actions that you've just discovered. That were not the actions of a trustworthy custodian. The actions that CelShorts took were not the actions of a trustworthy custodian. I trusted them to follow the business model that they had proposed to us. They did not do that. The other thing we all trusted them on, and by we I mean the Cel token holders trusted them on, was because CelShorts was started based on the ICO, right? The Cel token initial coin offering, is that company profits would always be tied into the Cel token, and that really did not happen. You saw that self-insurance product 2 years ago, and I'm talking about this now. Why am I talking about this now? I never talked about this in the past. Well, I did. I talked about this on the Twitter Spaces. I said, and you can go ask Otis if you want, I told him in private chats that I was so disappointed that CelShorts did not tie Cel token into the business model, even though CelShorts, the company, was bootstrapped by the money raised by that ICO, the initial coin offering of Cel token. That is so scummy. Regardless of that, I believed in people's own self-interests, and so I thought Alex Mashinsky's self-interest is in the survival and sustainability of CelShorts, and he has a sound business model, which is he's not taking any risk. There's no risk. The counterparty, the borrower, the institutional borrower, takes all the risk, while CelShorts maintains control of collateral. They were always supposed to be over-collateralized, and they would rehypothecate the collateral. But that's not what happened. Likely because the market is not developed for billions and billions of dollars to be borrowed out, only to be played out on risky trades, on swing trading, on arbitrage trading, on liquidity provision, on market making. Those are the ways they make money with CelShorts, right? Those are the ways you make money in crypto, on all hard assets in crypto, on all ERC20 tokens, almost all ERC20 tokens, and Bitcoin. The price is different across exchanges, so you buy on one where the price is cheaper, and you go out and you transfer the coins on to the other one where the price is higher, and you sell them, and you make your 0.2% or whatever. And you do that repeatedly. The ROI can be really nice, but in order to do that, you need to have the coin. So you go to a company like CelShorts and you borrow coins from them, and they want collateral in return. So I basically assumed that CelShorts was doing whatever was in the best interest of CelShorts, which would be to follow the business model that they proposed, that we all agreed to, that we all signed up for. I never signed up for risky DeFi plays. If I wanted to do that, if you told me that, well, things might have been different. I might have agreed with a different amount, a different percentage of my portfolio. I still might have agreed, but be clear and upfront about what you're asking of me. Don't tell me you're going to do something and then go out and do something else. That's just really scummy. Some people call it a scam. Some people called Alex Mashinsky a scammer. And I said his business model is sound. Why is he a scammer? Those people were probably lying because they had no evidence that Celsius was playing all these risky games with your money, with my money, but Celsius was. So those people, in essence, were more conservative than you and I ever were, and they were more cynical, and you know what? They were right. They may not have been right to malign Celsius or Alex Mashinsky, to cast aspersions, but they were right in their cynicism. We weren't cynical enough. There's no way to deny that. Anyway, so I am really just disappointed in the lies. I mean, if Alex Mashinsky said, we are going to make money on DeFi, I might still have said, okay, here's 5% of my portfolio. Go ahead, knock yourself out. I'll take the risk because I want rewards that are in proportion to the risk. I'm not doing that for 0.3% per annum. I mean, what's 0.3% per annum? That's what you get on Bitcoin, right? Or at least most recently, that's what you were getting on Bitcoin, on most of your Bitcoin. If you had more than one, if you had more than 10, if you had 100 Bitcoin, let's say, you're getting 0.3% essentially on your Bitcoin per annum. I mean, that's meaningless. In a market that does 10x, 20x, 30x every cycle, you're talking about 3,000% versus 0.3%. It's meaningless. The only reason I signed up for 0.3% returns and I was happy with it was because I had this understanding about the Celsius business model where they would be over collateralized, and they weren't. They just lied to us every single week. They went on camera and they said, oh, your money is safe because we don't do risky plays. We don't even waste money on marketing. Here, we don't put our name on stadiums. Here's a $4 sticker. I'll put it on my window. There you go. That's the stadium. That's my advertising. I love that thought. Nuke Goldstein went on Twitter and said, well, we make our transfers when the gas fees is low. And I said, that's really, really smart. You want to save money whenever you can. And here we are finding out that instead of telling people that we cannot continue to produce results or cannot continue to produce the yield that you want or that we promised or that you signed up for, because we don't have as many institutional borrowers borrowing billions upon billions of dollars worth of cryptocurrencies from us. And so instead of doing that, they just took on that additional risk. They became the counterparty. Without my consent, without my knowledge, without your consent and knowledge. You still want to trust them? Be my guest. It's your money. You can lose it however you want. I'm not going to lose my money. And so that is why I cannot trust Celsius. It doesn't matter who gets to run Celsius in the future. If Celsius gets rebranded, has a new strategy, whatever, I cannot trust them. This was a ray of hope, where someone would share a vast majority of their revenues with their customers. And sadly, it's not going to happen again. It's over. Some people say, oh, Alex tried, he was attacked. Well, nobody told him to take those risks. Okay? What I would have done, and I've done this in the past with my own company, we had investors who wanted to invest with us, and we said, look, we can't deploy that kind of capital. Millions and millions of dollars. I cannot deploy that kind of capital, so I'm sorry, but I cannot take your money. I can't just dilute my shareholders, the other shareholders, and bring in more money, even though I have no plan for deployment. I have a plan to deploy a certain amount of capital. That's all I'm looking to raise, and that's it. That's the end of the day. The doors are shut. The doors have been shut for years. Not because I couldn't get additional investment, but because I don't want additional investment, because I would have to take on more risk than was initially necessary, than is currently necessary. If you have more capital, you need greater risk. You take on greater risk because you can't find the counterparties. Warren Buffett cannot possibly go out and liquidate half of his net worth in a day without crashing the entire world economy. You can. That's because of the size of the portfolio. Your portfolio, even if it's $20 million, is much smaller than a day's trade, an hour's trade on the New York Stock Exchange. His portfolio is months and months of trading activity. He's going to tank several stocks if he sells half his portfolio. He's going to get pennies on the dollar. You're probably going to get 97 cents on the dollar even if you want to liquidate right now. So the size matters. And if you cannot handle $20 billion in assets under management, well, tell us that. When Bitcoin interest rates were reduced from 5-point-something% to 1-point-something% to 0.3%, I was okay with it. I told people that's okay. As long as they're not taking any additional risk, it's bound to happen sooner or later. They cannot deploy that much Bitcoin. If they can't deploy that much Bitcoin, well, the interest rate has to go down. There is no other way. That's the only way. And I'm okay with it because I am not playing a risky game. I am trusting Celsius not to play that risky game with my money. If I wanted to do that, I would have done that with another company that promises a risky game. Oh, but business models fail, businesses fail. You can't hold that against an entrepreneur. Absolutely not. You cannot hold that against an entrepreneur. What you can hold against your entrepreneur is basically them lying to your face. Lying through the teeth to your face, telling you that everything is fine, everything is hunky-dory, everything is going great according to plan, except they changed the plan without informing any of us. Some people said, oh, I just presumed that there was going to be high-risk play. Well, I didn't. I trusted Alex Mashinsky to do what he was promising to do. You presumed high risk. But there was no way that most of the people who trusted Celsius and became customers of Celsius could have known that they would have taken a high risk. Now, the cynic in me says, you should have accounted for that. The realist in me says that I did. But that's not true for you. Most of the people who are Celsius customers are not sophisticated investors. This is why you had such a huge outcry about, the custody accounts instead of earn accounts for US customers. If they were unaccredited. Most of them are not accredited. They're probably not very sophisticated, and they probably did not have the risk management tools, the training, the tactics that they needed in order to account for that. Someone said it's hypocritical to support them one day and then not to support them the next day. Well, I'll tell you what, by that metric, every person who dumps their partner, their spouse, after discovering that they've been cheated on is also a hypocrite. I'm okay with Celsius being insolvent as long as they followed their model. I trusted a model, I bet on a model, and that model called for minimal risk, and I was okay with low rates of interest, low yield based on that risk. But that risk profile was a lie. They changed the risk profile. What's worse is that they never told us. They never informed any of us that, oh, we are no longer going to be just engaging in collateralized loans to institutional borrowers. We are going to take your capital and we are going to deploy it in DeFi markets, become liquidity providers, become market makers, become swing traders, become arbitrage players. They never told us that. If they did, I would have rebalanced. You would have probably rebalanced. People would have talked about it. People would have talked about the increased risk profile. And yet everything you heard about Celsius was as if everything was just fine. Oh, every Monday I get my rewards. Yes, true. Except they're paper gains. If you can withdraw them, great. All power to you. Otherwise, they're just paper gains. So, in my last video, you can find it right here. It wasn't my last video. It was my video from previous week, last week. I talked about the different plans, but I'm just going to iterate that again. So mining is not going to save anything. It's not going to be plugging any holes whatsoever. The hash rate keeps going up. And the second thing about mining is that the person mining or the entity mining has bills to pay now. They cannot wait for the markets to turn in order to pay their bills. They've got an electric bill. They got to pay it at the end of this month. The electricity they're using today has to be paid for within a few days. The labor that they are using today has to be paid for within a few days. Their employees must be paid every week or maybe every month, and their costs, their rent, everything needs to be paid on a timely basis. So they have to sell Bitcoin that they're mining at the current prices. So the profit margin, even if it's 20%, we are looking at a very, very small profit margin right now. And the hash rate is going to continue to increase. And we're talking about a small $750 investment to begin with, most of which is already probably deployed and has produced more Bitcoin than it will ever do in the future because of rising hash rates. Hash rates fall a little bit during a bear market, but they're not proportional to the amount of decline that you're going to see in the asset price. But in a bull market, hash rate does go back up. And I'm not even sure how long these ASICs can remain profitable. But even if they do, the profit margins are going to be very, very slim. It's a very competitive market, and bills need to be paid every week, every month, sometimes every day. And you're talking about equity. Equity is not a plan. Equity is, you're getting what? 20%? 10%? 50%? 100% equity? You know what that means? If you received 100% equity right now, you would be taking on a $2 billion liability. That's what negative equity means. Assets and liabilities. When assets are greater than liabilities, you have negative equity. So if you received 100 control of Celsius right now, 100% of all equity of Celsius right now, you would basically owe close to $2 billion out of your own pocket. And then there are plans. You know, Simon's got a plan. Alex has got a plan. Some new guy has a plan. FTX has a plan. Maybe CZ from Binance has a plan. Maybe TradFi has a plan. Goldman has a plan. Somebody's got a plan. Tell you what, don't count your chickens before they hatch. This is my final video about Celsius for a good reason. I cannot continue to poison myself with this toxic hopium forever. You know, even though I don't subscribe to it, the vehemence, the strength of belief that some of these hopium peddlers have is just insane. You know, some of them are wrong about basic math, and then they go around and then they question you. I have this guy blocked because he would not stop insulting me about several things that he was absolutely wrong about. It's not a crime to be wrong. It's also okay to be adamant about your position, except to go out and insult someone who knows basically a little bit better than you, for lack of better words. That's just ridiculous. And so that's the same exact attitude that we have here right now with some of the people who believe in Celsius. Oh, Alex has got a plan and it's going to be rebranded. They're going to come back stronger. With what? They've lost the trust. They have lost the trust. They have lost thousands of people, the trust of thousands of people who trusted in them, who gave them their money. Sometimes an entire lifetime worth of savings were deposited with Celsius. I know someone from Vegas who is really struggling right now. And this guy, I'm not going to name any names, but he is on disability and he receives a check and he has to take care of a young child, a young boy. And he lost everything he had. What are you going to tell him? Oh, you're just being a fudster, right? That's what you're going to tell him? There was this story which some of us said was FUD about this grandma killing herself because her grandson had encouraged her to put all her money within Celsius, and then withdrawals were closed, and then eventually Chapter 11 bankruptcy was declared. And many of our community were quick to point out that sounds like FUD, and that post has been deleted by Celsius admins on the Celsius subreddit. Well, they said, did you ask for any proof? I said, I don't ask for proof when it's concerning people's personal situations. You know, if you come to me and you tell me I'm in trouble, I'm not going to be like, show me your bank statements, dude. You're not Celsius. You're not accountable to me. Someone said, and this goes both ways. So someone said, oh, I am going to donate most of my earnings from the Cell token short squeeze to people who are suffering. And I said, okay, that's very nice of you, very noble of you. And he said, no, hold me accountable. And I said, it's your money. It's your prerogative. Whatever you do with your money is your problem. It's your prerogative. It's your right. You get to do whatever you want. You get to decide whatever you want. And you get to deploy your money however you want it. And I said, who's going to get what percentage of your money? That's going to be a whole another can of worms. And then that's also putting, the cart before the horse. You're talking about distributing profits that you don't even have yet. So it's kind of a pie in the sky. So once you have it, you can discuss about it. We can certainly chime in, but it's your money. You get to decide how much of it you distribute to other people and who gets what. At the end of the day, it's your call. Nobody can question you on it. But I can question Celsius, and I can question people who have fear, uncertainty, and doubt about evidence. If you tell me, oh, this guy murdered that guy, and I say, give me some proof. If you tell me I'm hurting, I'm not going to ask you for proof. It's just common sense. Why is it so hard to understand? I don't get it. Then finally, there's this argument that CeFi is essential for newbies, people who are just joining into crypto, people who are not familiar with DeFi, people who are not comfortable holding their keys, storing their keys, and whatnot. Well, tell you what, a lot of people who are in Celsius were very adamant about not learning DeFi, not learning hardware wallets. And then suddenly this happened, and many of us learned in quick succession, very rapidly, because necessity, as they say, is the mother of all invention, but also mother of all learning journeys or learning curves, because you're going to learn when you start discovering how unsafe it is to leave your money with someone else. CeFi may have a more polished interface. It may make you feel more comfortable, but at the end of the day, you're putting your money in someone else's wallet. And that's going to come back to bite you in your wherever sooner or later. It's going to happen. So regarding claims now, as I said, this is my final presentation on Celsius for several reasons. So I must talk about claims. And people have been asking me my opinion about claim forms and whatnot. And the first thing I have to tell you is that I haven't filled it out yet. I may not fill it out for two reasons. First, they may be asking for more information than I'm willing to reveal about my financial situation and so on and so forth. Second, actually three reasons. So second, it's a very small percentage of my portfolio and I can easily write it off. And third, there are other people who can actually get ahead of me in the queue and who could definitely have a better chance of improving their life with recovering their money, even with a haircut, better than I can. So for those reasons, I am unlikely to file the claims form myself. That might change. I'm going to look at this form later on this week. If they don't ask for too much information, and I'm going to have to check the balances, current balances based on the current market price. If it's, let's say, 0.5% or more, I might do it, assuming they don't ask for too much information. But it's unlikely that I'm going to fill it out. Now, finally, I'm going to talk about the crypto market now. I am very bullish on crypto market long term, but I'm also more bullish on DeFi than on CeFi. And I'm going to be bullish in terms of having multi-sig wallets, I'm very excited about multi-sig wallets. If you want me to do tutorials about multi-signature wallets that accept multiple keys, let me know in the comments below and we'll talk about it. I'm also very interested in doing a video about Kelly criterion. Many of you have messaged me or posted in comments, some comments. The last video did not get a lot of views, but some people commented that they wanted to check out the Kelly criterion and allocation principles. Capital allocation principles. So we'll talk about that. There are, we are going to look at hardware keys, hardware seeds. I'm going to do more tutorials about that because people need to learn that, especially those who don't know about it. If you already know about it, great. You already know about the principles, but we'll get to the very basics of DeFi, of managing your own seed, of taking control of your own keys, so on and so forth. And we'll talk about why I'm not going to be putting my money in a yield generation app in the future, because 5% yield pales in comparison to 2,000%, 3,000%, 5,000%, 10,000% run-ups in some cases every bull market. I cannot risk the 10,000% growth rate for a 5% yield on some app where I don't even control the coins anymore. So that's a big learning thing for me. I have learned that no matter how trustworthy people seem, and Alex Mashinsky is as good as they come. He's as trustworthy as some people can be, or anyone can be, or at least I thought so. And we have all seen the consequences of that. So I am not going to be doing that again. Crypto loans suck. I made a video about that. You can watch it right here. Months ago, crypto loans is not a mature product for several reasons. Just to recap, let's say you have mortgage and then the housing market crashes. Even though you continue to pay your obligations on a monthly basis or fulfill your mortgage obligations on a monthly basis, if the bank came back and said, hey, you now have negative equity, so we are going to have to liquidate you, that's not going to be a great situation for you as a homeowner, right? As long as you meet your monthly payments, right, your mortgage payments, the bank cannot, or the lender cannot essentially tell you that we're going to boot you out just because your the price of your asset dipped in value. And secondly, you continue to make yield on the asset that has been collateralized. In case of real estate, you can rent it out if you're not living in it. If you're living in it, well, you're still using it, so on and so forth. But you cannot do that with crypto loans. And crypto markets are far more volatile than real estate markets anyway. But even with negative equity in real estate markets, you cannot really be forced to get out of your house or to be liquidated unless you pay back your entire mortgage in one go, which is going to be impossible. And the entire mortgage industry would collapse. So if you want to watch that video in depth, go ahead, watch it now. And yeah, we are going to talk about in the next few weeks several assets. I am excited to talk about new assets that I'm researching. This is going to be very interesting for you. So you should subscribe if you haven't already. And if you have assets that you want me to research, remember, research is no guarantee that I'm going to invest, okay? But I will research the assets that a lot of people request me to research, starting with the next week. And if you want me to, or if you have assets that you want me to research, we'll do that based on their potential profitability. And if I do allocate, I'm going to talk about how much or what percentage of my portfolio I'm willing to allocate in this new asset. And finally, this is going to be very interesting since we're getting towards the very bottom of the bear market now. There was this experiment done in the 90s where they took a bunch of monkeys and they had those monkeys put their fingers on basically stock tickers, and they built out a fund out of those stock tickers that monkeys selected. And that hedge fund, they compiled that, outperformed pretty much every other hedge fund out there. So I'm going to do the exact same thing. I'm going to take a small percentage, a very small percentage of my portfolio, and then I'm going to, let's say $15,000, let's say. And then I'm going to find 30 random assets that I have no idea about, no knowledge about, that I'm not invested in, I haven't researched. And I'm going to just randomly select 30 assets and deploy $500 on each of those assets. And we'll observe that portfolio. You know, my guess is, or there is at least a solid chance that this particular portfolio of random assets is going to outperform the best influencers that you follow. You know, take their recommendations, put them on an Excel sheet, and I'm going to constantly update you on this. Let's call it the monkey fund, right? The monkey crypto hedge fund. And I believe that this monkey crypto hedge fund is going to put a lot of crypto influencers to shame and a lot of crypto geniuses and experts to shame, which goes on to show you that market movements or market trends matter far more than individual picks do, as long as you're not investing in obvious scams. And I'm not going to be doing any research on any of these assets that go into the monkey fund. So I might as well end up picking up some scam stocks or scam cryptos or scam coins, and that's fine. You know, I'm totally willing to lose the entire 100% of my investment in this monkey fund. So if you want to follow along, I recommend you subscribe and hit that bell icon so you get notified every time I post an update about that monkey fund. So that's going to start within the next few weeks. And I'm really excited about that because I talked about this last year, but we were at or very close to the top of the bull market back then. And so that wasn't a great time to start. But now we're getting to a point where it's going to be a great time to start making or building out this monkey fund. And yeah, it's going to be totally random, and it has to have assets that I have never researched before. I have no affiliation with, correlation with. I have no personal investment in. I have no professional investment in or experience with. Just random assets between ranks of, let's say, top 1,000. Okay. any ranks within top 1000. So this is going to be very interesting to follow, and I'm myself looking forward to the results of this experiment. And if you want to follow along, go ahead and subscribe. That's it from me. Like I said, this is the final video on Celsius, at least for a while. If I make another video on Celsius, it's going to be when you start receiving your money back. Most likely, I'm not going to be filing that claims form because of reasons I've already discussed. If you do file that claim form, I'm going to be following everybody on Twitter, and I'm going to find out about when you receive your money. If you receive your money with a haircut, my recommendation, like I said in a previous video, is going to be that you take the haircut and take your coins now instead of waiting and hoping and banking on a promissory note, as it were. My name is Lakshay Behl. It was great fun talking to you today. I'll see you in the next one.